Tariffs are back. Liberation Day 2.0 is here. Governments around the world are reaching for one of their oldest, most powerful weapons, that is tariffs. These new taxes are set to hit global markets, sending shockwaves through portfolios and rewriting the rules for everyone watching and not watching alike. And most investors are definitely paying attention. But if you hold crypto, this is your moment to act. Prices are shifting right now. Chaos is building, and if you know where to look, the opportunities have never seemed greater. Today, I'm breaking down the new wave of tariffs that's about to hit the global economy. We'll look at why this is happening now, how it's moving stocks and crypto, and what the latest data says about where the big money is flowing. You'll see exactly how Bitcoin, Ethereum, and Solana, and the entire crypto ecosystem, for that case, fits into this new shifting landscape, and what every investor needs to know right now. So let's get into it. Just quickly, what are tariffs and why do they matter? In very plain English, if you have not been keeping up, tariffs are basically just taxes placed on goods that come into the US or any other country from a different country. And essentially, governments use tariffs as a pawn on their chessboard. It's to collect more revenue and influence how products move around the world. And every time a new tariff goes into effect, it sends a signal that the rules of trade have changed and speaks of the relationship really between countries. And right now, the US is preparing to launch a new 25% tariff on imported goods from Japan and South Korea, starting August 1st. And more countries are lined up for similar measures. These policy moves matter because they change how supply chains operate, affect prices, of course, for everyday people, and can reshape entire financial markets. Tariffs demand our attention. They're not just political headlines. Each new move has a direct impact on your wallet, on my wallet, on our investments, and the economic landscape we live in. And when tariffs rise, the chain reaction starts almost instantly, the domino effect. And the first signal always shows up in the prices you pay. If the US sets a 25% tariff on steel, for instance, from Japan, the cost of a new car, a washing machine, or even a kitchen sink moves higher. Tech products like smartphones and laptops feel it too. The extra cost moves from factories to stores and finally lands with you and I, the consumer. As prices push higher, companies shift their budgets and strategies. And over time, these changes, they build inflation when the cost of goods and services steadily rise. And central banks have to respond to this pressure. Right after the latest tariff announcement, for instance, the US 10-year government bond yield jumped 4.40%, and Japan's 30-year bond yield crossed above 3% for the first time in years. Investors see bigger risks and demand more money to lend, which directly affects everything from mortgage rates to business loans. Stock markets also end up reacting in real time. The S&P 500 has traded above its upper Bollinger Bands for 8 days straight, a clear sign of prices stretching beyond their usual range. And beneath all of this, only a handful of companies are lifting the index, while market breadth, the number of stocks rising together, has dropped to the lowest point seen this century. Governments now collect record high tariff revenues, with official data showing the highest level since 2016. Trade flow responds quickly. China is rerouting more exports through Southeast Asia and the European Union to avoid US tariffs. Each reroute brings new costs and uncertainty for business, which all rolls down to the price tag in the store. And trade policy decisions echo far beyond the headlines. Every tariff leaves a clear mark in the cost of living, the strategies of doing business, and the way global markets move. Each new rule shifts the map, and the impact shows up in both daily life and the balance sheets of entire industries. And the ripple effect is exactly what sets the stage for the next wave of opportunity and risk. And every time the old system gets hit with shocks, like these, capital starts searching for a new safe haven and alternatives. And this is where the story turns and crypto steps into the spotlight. So let's talk about that a little bit more. Let's lean into it. When tariffs ripple through global finance and their shock waves reach crypto in powerful ways, capital ends up searching for safer homes and different alternatives. And this is when digital assets step into the spotlight. Bitcoin keeps making strong moves. We know that Strategy, Michael Saylor's company, have raised more cash for another round of Bitcoin buys, showing relentless confidence in the asset. On the blockchain, more than 80% of all Bitcoin supply is currently held by long-term holders. Some wallets are now taking profits, moving some coins held for years, and major players track these macro changes closely and adjust their positions with precision based on these big moves they see happening by big players. And market behavior confirms this shift. Retail inflows on Binance have dropped below $12 billion, reaching the lowest level since April. And fewer casual investors are stepping in. And the larger holders, as I was saying, have greater influence. Crypto mining equities are also rallying with renewed interest as macro pressures build. Bit Digital, a major mining company, recently sold all of its BTC holdings and added $200 million in ETH to its balance sheet. This adjustment strategy points to growing belief in Ethereum's ecosystem and may indeed be pointing to an altcoin season. So we see Ethereum is standing out in recent data. Spot ETH ETFs have attracted 61,000 ETH of net inflows for 8 weeks straight, highlighting steady demand from institutions. And on-chain stats show Ethereum demand now exceeds its new supply, creating a setup for upward price momentum because there's more demand for the Ethereum whose supply is not as readily available because it's continuing to be purchased in huge quantities. And the US government has redeposited 218,000 ETH to Coinbase, a number that captures market attention and influences price dynamics. ETH continues to grind higher within a broader range, showing resilience and optimism among traders. Solana is also drawing more activity and capital. In 1 week, Solana's dApps brought in $90 million of bridged liquidity. The network reached 14.6 million active addresses in a single 24-hour period, marking a spike in real-world usage and on-chain engagement. Innovation remains at the heart of crypto. We see Jack Dorsey recently demonstrating Bitcoin transferring using only Bluetooth, moving BTC peer-to-peer without an internet connection. This advance adds security and independence to the ecosystem. Each of these data points paints a clear picture for us. As capital moves in response to global uncertainty, crypto stands ready to absorb and transform these flows. Digital assets continue to evolve, drawing more and more attention, more adoption, and more momentum. So of course, these big new shifts bring new risks and plenty of questions for every investor. The most important thing, though, is knowing how to spot the signals and how to navigate the volatility that follows. So how do we navigate this volatility? Well, we know that market signals can shift in a heartbeat. One headline changes and suddenly price reacts across the board. And for anyone navigating these swings, staying calm and paying attention to what matters makes all the difference. Volatility feels intense, but it also brings new opportunity, especially when you know how to spot them. And market breadth is one metric worth tracking. Market breadth, that's with a D, so it's like bread, but with TH, breadth, measures how many stocks rise at the same time. When only a small group of names drives a rally and most companies remain flat, the market's foundation weakens. Professionals watch these patterns closely. And when retail investors step back, larger players quietly add to their positions. Opportunity builds for those paying attention, and focusing on information over emotion is a real edge. We know that the best traders are non-emotional in their decisions. They're calculated. Signals like changes in market breadth, movement in bond yields, or fresh activity on chain can give you an early read on how things are evolving and unfolding. Rising crypto inflows or just a handful of stocks driving the market often point to real changes in momentum. And we know that diversification gives you more flexibility and protection. So placing all your capital in a single asset or sector leaves you open for sudden swings. So instead, spreading your exposure, spreading your money across crypto, equities, cash, or DeFi creates a cushion or a hedge against shocks. Checking risk on a regular basis helps you stay steady through volatility. Liquidity matters in a choppy market. Holding some assets in stablecoins or cash makes it easier to respond when new opportunities or risks appear. You have a cushion. Every move in the market brings a lesson too. The most resilient investors, they plan for turbulence. They keep learning and they adjust as signals evolve. So staying focused on real data, staying flexible, and being prepared turns volatility into your advantage as the story unfolds. Tariffs build new walls. Every new barrier forces capital to search for open roads, for new alternatives. And crypto is the escape hatch, ready when all systems close their doors. This is Liberation Day, and the advantage belongs to those who stay prepared, act early, and recognize that volatility creates new paths, not dead ends. So in closing, today you've seen hopefully how new tariffs are changing the game and why the biggest players, the most financially successful investors like Strategy and Michael Saylor are making bold Bitcoin moves and are not scared, and how Ethereum's record inflows and Solana's explosive growth are reshaping the landscape. Moreover, how global markets are adapting to every headline. All of this points to a new chapter taking shape, a new chapter opening. So your advantage starts with emotional discipline, managing your mindset, not just your portfolio. In times of volatility, knowledge is your greatest shield, and staying grounded keeps you a step ahead. I work really hard to bring you the most important stories and real strategies to help you navigate every market cycle. So if this video brought you value, you learned something, or it was reaffirming, I would just ask you like the video and share it with a friend or family member that needs to know what's going on and currently doesn't. As somebody commented in my comment section, it's best to make money together. So if you can make money and help your family, lift up your family members and your friends, that is even more fun. So that's a wrap for today's video. But before you go, quick question. Did you know that Trump wants to give $1,000 to every single newborn? We covered this in yesterday's video. You may want to check it out right here. And I love you guys very much. I'll catch you guys in my video tomorrow. Take care. Go outside. Enjoy your day. Catch you guys tomorrow. Ciao.